Okay, today is Friday, June 16th, 2017. And looks like we're a few days past the Fed statement. They raised interest rates, 0.25% this week. And there's not a whole lot of big action as a result. Yeah, gold's flat right now from yesterday's close. It was down, say about almost 2%, maybe 1.5%, which is about $20 yesterday from the day before, which was the U.S. central bank announcement. And, given that they are um, raising rates, that's a gold price suppressor. So since the gold is not being suppressed like I would expect it to be, um, that is telling me something significant, and I will let this go on a few more days, or maybe another week, before I conclude. But basically, I'm thinking that the hedge funds and everybody else in the markets, they are they are buying gold. I know on one hand there are five big banks and they may not be the only institutions doing this, but supposedly they're doing this in cahoots with the government. That's what I've heard from business spokespeople. The part about the government from just one, the part about the banks suppressing the gold price from multitudes. And you don't hear about this on like CNBC or Bloomberg. Those are mainstream business news syndicates. And if you go online, you can find the underground news, business news syndicates, and it's actually kind of common knowledge in the independent news. Some of these things are like the gold suppression, the dollar being propped by central banks, and that whole fiasco. But basically, on your independent news syndicates, people aren't afraid of broadcasting what they see, whereas you would be cordoned or corralled if you show up on a mainstream news channel. I mean, you can get in a couple of blurbs, but they're not gonna raise the issue. You understand? Whereas on the underground independent syndicates, they will raise the issue. They will ask specific questions about exactly what you're seeing, what you're pointing out, because the journalists, quote unquote, down here, they want to know more about that, and they want their they want their viewers to know more about that. I mean, that's the basis of honest journalism. Uh, but you can only get that from independent journalism, not corporate owned journalism. And a lot of the complaint that I've ran into in the trading industry out there on the forums is that you don't trust CNBC, you don't trust Bloomberg or any of them, because basically they will tell you that things are going to be okie dokie until the markets are hit. So they are preparing but they are telling people something else, right? So that they don't create a panic and they don't get everybody else selling off, but they're actually preparing, and then the big sell off, and then they start talking about it. Okay, and then when they're preparing to buy up, they do the exact same thing. But the opposite way. They say that things are going to continue to be bad. The outlook, yada yada yada, and then things start to look better. And then once it's on the charts, then they have to come out with it and say, hey, look, things are looking better. This is why. Yada yada. But they're already based in their positions long before they actually start to reveal what their points of view are. And so that has a lot of people skeptical. Now, these skeptics aren't always right, though. I've been following CNBC for a long time, and there are very credible voices on there. They are about 5%. They aren't the majority of voices on there, and I'm talking about everybody, including the anchors, the journalists, and definitely all the guests from hedge funds and so on and so forth, the CEOs, traders, pit traders, that kind of thing, brokers. And so there are some that are valid. There are some that I think they want to be valid, but they just aren't. They don't work hard enough. They're not as objective in their passion for this kind of industry, and then there are others that are just, like my granddad used to say, farts in the wind. That means that whichever way the wind's blowing is the way that they are going, and as soon as the wind changes direction, well, you know which way they're going it. So, and there's a lot of that. And the journalists are the same way. And so you've got to be able to pick out people. And I've been able to do that on CNBC. I've been able to do that very well. And extremely well. And in fact, I think that the foundation for my understanding I picked up from people talking on CNBC. But my foundation for understanding who knows what they're talking about and who does not, and learning to read between the lines like an expert. I picked that up before I even got into trading. So again, about this gold, if hedge funds are buying up this gold, okay, and that's what it looks like right here. I mean, look at this volume. This is really heavy volume. I'm going to zoom that in. Okay, so this is a 5-year chart, going back 5 years, right? 5 years? No, 20 years. This is a 20-year chart. Okay, so this goes back to the 98. And this is a monthly chart, and you can see that these past months, about 6 months, I would say, 6-8 months, a lot of volume. And they might sell off. I mean, there's not a lot of momentum going either way right now, but it's a lot of volume. There's a lot of trading in and out. And that makes sense because this has become a very liquid market. So the thing about it is, when a market becomes liquid, it's like a big billboard, big flashing sign, hey, traders, come trade me. And so all the algorithmic traders from all the hedge funds and all the, the pit street traders online and in the pits and so on and so forth, they get in it because there's a lot of liquidity in there. And just becomes easy business, a lot easier than, say, an illiquid market. And until it becomes an illiquid market, then then they'll just stay in there. I mean, that's just where people make their business. Another thing is that right around here is where the internet really became big. This is about 2000. And then, as everybody migrated towards online trading and electronic trading, you can see that the volume picks up heavily. And it was about right here. This is, 2013. It was actually right here that the Fed makes a statement and saying that they're going to start to put on the brakes and not basically wind down their stimulus program, which is just flooding, the world with dollars, and then reaping taxes from it and all kinds of control and profits. Okay, so then you get this huge drop for that month, right? And the thing is, though, it looks like now it's on there. I was going to say there's not a lot of volume there. But basically what you see here is you see a ton of volume right there on that big announcement. That was their first big announcement, and then this thing channeled, right? You can see the channel here. Wow. See a really well-defined channel, and then it was last year. Then it starts to pick up again because it had gotten down there so low, but also it had met support here, right? So here's the very tip from back in 08, and looked like a good level to everybody, so everybody tried it. They got a rise in it. And that's that. The Fed still continued to unwind, but it had become a trade in that this had come down so much that bears were so built up in here. There was so much short. There were so many shorts in there, so many shorting programs in there that basically, if you started to buy, if everybody buys at a certain kind of level like this, right? If everybody says, okay, this is the level, hit it and just buy it up, everybody gets on board with that. Basically, what you're going to do is you're going to push out a ton of bears that are going to have to buy to cover, and so you get that triple rise from bears buying to cover and then turning around and buying long. And then when everybody sees that and knows that's happening, then they're going to come to the market and they're going to just buy long. So that you get that that triple trifecta effect. And that's why they do that. And it worked out pretty well. It worked out for quite a while. And then right here, I think, let's see what was happening here. Okay, then Trump comes along. This is Trump. He's winning. Okay. This is actually November. This bar right here, the big drop. Here, I'll zoom in. I know that's too small. Okay, yeah, this bar right here is Trump winning. That's November. Okay, and because basically Trump signals that the gold is going to come down because Trump is he's pro-capitalism, which means that, well, I mean, he's a master capitalist. Basically, he's the most famous master capitalist out there. Maybe he's not as wonderful as Carl Icahn, or maybe there's others, but he's definitely in the most famous category in our times, and he's also the antithesis to, say, J.P. Morgan's, Rothschilds, Warburgs. He's definitely the antithesis to Marxists, and so that means that economy is going to be worth more the dollar's gonna be worth more, therefore gold's gonna be worth less. And that's why they sold off the gold, right? Because gold's an insurance against Marxism, right? Against Marxist dollars, right? So if you have somebody that's going to fix that and make it capitalist and solvent, then you don't need insurance, and so there's a rush out the doors on the gold side. Okay, but then they start grabbing gold again here, and I believe that's because the prices got low enough. Right now, you got to look at this like this. This is a higher low. See, this is the theory right now. Actually, it's not the theory, it's the reality. The reality is that there's a lot of hedge funds and so forth. The bigs are buying gold, but there's also banks. There's a government condoned bank multi-bank policy for suppressing gold prices, which is the counterweight to the control of the dollar via the Federal Reserve Central Bank and their hold on the bonds interest rates, which control the dollar. And so what it looks like is there's about 4 trillion somewhere in that area, 4 trillion from the Federal Reserve just to hold those interest rates right. And then there's something like 222 trillion, and it was upwards to 300 trillion for keeping gold prices down. That's what I gathered. Okay. And I actually would have to find the time and then go and find the the documents, the records, and basically, this is kind of a dark area for me, so I'd have to walk in there and actually shine the flashlight around and look at the infrastructure, map it out, and then report on that and verify that. But that's multiple business people that have been in for decades. They run financial institutions. Okay, so that are speaking out about that on the, conservative business underground railroad news. Okay. And one of those that you can find is X22 report. So that's a big one down there. There's another good one I found, and I forgot who they are. But X22 report is very focused on how he's also got a blog. His name is Charles Hugh Smith or something like that. He's also got a blog. It's called Of Two Minds. And so, he's very conservative, capitalist, expert. He sees all the fake things going on. He reports on it. And he knows how the whole system's upside down. And it's actually an expert that's detailing out how this works and how it can't last, which we kind of knew, but he actually has he's actually gone in there with the flashlight and shined around, and then he started his own news, daily news report, which is on YouTube, and he brings in people to interview. So he's doing well there. He's the first of that kind I've ever seen. Most of the time, journalism is about covering up and keeping people ignorant in these things. But he goes through it with a fine-tooth comb and then brings people in to discuss where they see this going, too. So it's a lot of people. And it's really serious. It's like it's kind of like a Charlie Rose the Charlie Rose of business, I would say. But there's no cover up, you know. Okay, so the banks are pushing down gold prices. Hedges are starting to get in gold, and you can see there's a ton of volume here. Makes a lot of sense. You got a higher low here. Okay, so basically, what they're saying is that gold would be a lot higher if it weren't for them suppressing gold prices, and they're doing that to control the dollar. But that dollar can't last forever, and eventually the cap comes off and the gold flies up. Of course, because you accumulate gold to be able to sustain yourself in a crash, whether it's just a stock market crash or an actual dollar global economy crash, which is apocalyptic basically. So that's why there's a lot of accumulation right here. That's why this price didn't get back down to this support and then continue lower. Now, I had predicted that back here in 2014 and 2015, I assumed that the price would run on down to 800 by the end of 15, and it got down to about 1050 there. So I was right about it being depressed because of the Fed relaxing on their inflationary actions, and so but then it turned around. I didn't understand why it turned around, and supposedly it's every reason that I'm telling you that it turned around, and so now I've changed my whole position to expecting it to get a rise. And another thing I got to tell you is that basically a lot of the independent news pundits are all saying, "Hey, the dollar's in big trouble. The stock market's coming, to a hard time, a crash." They're not exactly saying that the whole thing's about to go up, although that is something that everybody's looking out for. They're just saying that the dollar is in big trouble, the stock market's in big trouble, and I've never seen them all come out at the same time within a short time frame, about 10 days. And if I look again, they're probably still going on about it. They might have changed the narrative, but these aren't CNN corporate, floozies up there. These are just underground people, but they're all talking about the same thing at the same time. And of course, they probably look to each other, but I've never seen them come together on something and focus on the same thing all at the same time like this, so broadly across the board among them, which is bizarre. And then on CNBC, I see that people are also talking a little bit about it. They hint here and there. They don't make a big deal out of it. Nobody makes a big deal out of it, but the serious voices that I hear, they do mention it. And then the bread in between, the gray fellows in between that are just kind of the gray people. They're not they're not hot, they're not cold. They're kind of in between. They kind of slip the insinuation in there as well that there's a correction, something, things aren't going to work out, right? And and then also, when I look here, at this chart, the S&P 500 E-mini futures. Hold on. Yeah, so what I'm seeing here is you've got upward movement. The price is still moving up, but notice that from way back here down to here, the MACD has been declining, more and more every time this thing gets a pump. Okay. And so now the MACD is almost, down to break even right here, the middle part where it just doesn't turn green anymore. But price is still going up. So I've explained that in a different video, and basically what that means is that the volume is turning more and more towards the bears rather than the bulls, right? So you've got price moving up here, but there's actually, because of the lack of bullish sentiment, there's still bullish sentiment. That's why the price is going up. But the ratio of bulls to bears is that the bears are gaining on the bulls. It was undeniable here, right? The ratio of bulls to bears was very bullish. Now the ratio of bulls to bears is not so bullish. It's just leading the bears enough to keep prices up. Okay, which means that this is getting very weak, and everybody's kind of complacent. When the market gets complacent, there's nothing on the rise. Nobody's expecting prices to be up here. They would like it to be up there, but they're not thinking it's going to be up there. So nobody's buying this, right? In order to buy this, you got to have a ton of people around the world saying, "Yeah, well, prices will be up here," but they're not. They're not buying this, and it shows right here. This is where you can see, and so that might be kind of hidden to you if you're kind of new. But let's just say that if this was very bullish, right, this MACD would be up a lot higher. There would be a lot fewer bears, right? So instead of like what it is right now, two bears for every 3 bulls, it would be something more like 3 bulls for every 1 bear, right? That's what that is. 3 bulls for every 1 bear. That's the ratio there. Over here, it's more like 3 bulls for every 2 bears. So you can see that there's a big chunk that has switched, right? And you can see the volume's not that bad right here. Earnings did just come out, so that's kind of that has something to do with it. Every time this is the open interest. So right here where the open interest drops off, that's where earnings begin, right? The earnings month or the quarter, the first month of the quarter of reports. Yeah. So and then the Fed raises rates. People don't expect Trump to be able to get the tax cuts done. Well, there's probably pretty good reason for that. And I have said that I don't think that they could ever get it passed through Congress until basically too many rich people are saying, "Hey, look, the stock market is corrected; it's down. We need something to boost it up." So, and so then they boost the voice and pay over there to the Congress people. And then they start to vouch for a tax cut in order to get, prices up again. And so I'm kind of thinking that Trump knows that, and he'll just let the market come in and then pressure them on Wall Street and corporations and everywhere else where they have large shareholdings and so forth. And then he'll let them do the hard work on Congress, and then Congress will come through on that tax cut. But until then, I don't think it's going to get pushed. I mean, it's just not on their schedule right now, and that's just people just expect that as the farthest thing from happening or being the number one subject in Congress, because they're not what you think. And you know, I could go on about a whole spiel about that and why, but it's all related to the, you know, Marxist central banks. Okay, that's a business. Um, that's a business plan. Okay, and so that's the dominant business plan in the whole world. And so to go against that, you have to have a lot of leverage. There has to be a lot of gravitas. Okay, so it ain't just a light switch on and off thing. It's you've got to manipulate. You got to have patience. You got to let the forces work until you can get it. If you can get the planets all lined up, if you can wait long enough, get the planets lined up, then things will happen. But it's not a light switch thing. Okay, so that is that, and I guess let's do some trading here. I'm going to try to duel this thing for you. I don't think the gold is going to be a good show. Yeah, usually isn't. This is Friday. It's 2.5 hours into the session. I would say that this one was probably going to be the best. The Euro's probably pretty lazy. Europe has gone to the weekend break already. It's Friday. All right, so gonna get this old thing going on now. This is Ninja Trader. It's Ninja Trader 8. Basically, the difference between the 8 and the 7 is that the 8 uses all of the cores of your CPU, which is your computer processor unit. It's that chip in the middle, the big chip, right? So Intel makes the i7, the i5. AMD makes chips as well. They make the cheaper CPUs. And so these CPUs, they have multiple cores, and basically it's kind of like having multiple chips. And so each core can take on some of the computing process, some of the data, and solve those problems. And so if you have multiple cores computing at the same time, then you can process data much faster. Be like 4 people working or 8 people working instead of just one. So the 7 would only use one core, no matter how many cores you had in your CPU, and then the 8 goes through all of your cores, and therefore you get a faster output. Um, So that's the Ninja Trader. The Ninja Trader comes free with the firm. It's kind of popular for the prop firms that need a cheap uh, trading platform for whatever. And once you get pro, though, if you ever go pro, I recommend the Investor RT, and I recommend looking online, YouTube and Google, and look up Futures Trader 71. It's Futures Trader 71. And Look that guy up. He's got a lot of information about how to set up the that IRT platform, and basically he's got it so that you just plug it in. You know, you just copy his settings and then dump it into your platform, and then you've got the same indicators and everything on there. And then, of course, he uses the thing every day. He tells people how to use it. He's got all kinds of seminars. He's one of the most active coaches online in regards to how to use that one. And then the other one that he uses as well is the book map, and that is a heat map. It is like the Jigsaw. The Jigsaw will run you $400 for a lifetime license. It plugs in to the Ninja Trader right here. Okay, and you can get it so that it's independent, so that it doesn't plug into anything. It's cheaper. The book map, the level that you need is $100 a month. Okay, so by the end of the year, you've doled out $1,200. So compared to a lifetime license for $400, it's considerably more, but it's also considerably more sophisticated, and that's the beauty of it. The sophistication. And the whole reason I'm telling you this is because the Ninja Trader and the Jigsaw trading heat map are not as sophisticated. They are price savvy, okay, but they're generic. You got a cup and handle right here. I'm going to go ahead and play along with this. So you see the handle here, right? Here's the cup, right? This is the bottom of the cup. I'll detail all this out for you. Okay, so what happened was you got some selling here. You get a bounce right there. That's support. Runs up, stayed below, right? As soon as it peaked over the VWAP, it started getting greedy right in here. Okay, sells off. Looks like the bulls tried a little bit here, but then they got beat off pretty bad. You can see. Okay, and runs up, comes back up, bounces off support, gets you some quick wicks there. Quick wicks. Okay. So it bounces off, and then basically what you would expect is that this is going to be... Right? No, actually what happened was this becomes where it was support. It bounced here. This was support. Bounces off. Resistance, which was support back here, drops down, comes back up, bounces off this, which was support, which is now resistance, makes the double bottom here. So this is all plain to see. I gotta buy that. Let's see here. Put the right market on. That's weird. I guess that's right, huh? Okay, this isn't how you do the strategy. I just wanted to buy that real quick. I'll start to work this in just a minute. I should be making some on this at the same time. Okay, so I'll detail out the rest of this. Basically, what happened was you got the double bottom there. That is the bottom of the cup, right? So where you get the double bottom or the double top. So this all could happen, and the bulls could be in charge. On this chart right here, the bears are in charge. Okay, and otherwise they would be on top of the VWAP. Right, that's that purple line. And so where it makes a double bottom here, if the bulls were in charge on top up here, it would make a double top. Okay. And so you look for the exact same steps. The bottom of the cup. Sometimes the bottom of the cup is just a long wick, right? One of these right here. A long tail. On the top, it's a long wick, or it's a series of them. This right here, right? You got a good sized tail there. Okay. And then basically you get the this thing's running on a rail here. Okay. Looks pretty organized. Everybody's pretty organized. They're buying all that. I'm following all the rules. Okay. And then basically the handle bounces right on this support level. It can be any support level. It could be this one. It could be this one. Okay. And then you got usually what happens here about right here where the handle, okay, the handle will pull back and then it'll peak over the top, right? This is resistance, and where it peaks over the top, you expect a lot of volume. You don't expect this bit right here. That's a quick rise and then a quick sell. Okay. You expect what is called a bear trap. And I'm watching this over here at the same time. A bear trap is where everybody has all their stops right about right here, and then price comes up, hits their stops, causes all the bears to buy to cover. That's the volume that gives you a short squeeze. It rushes high, and that's always a good trade, almost always. So you look for these bear traps. You also look for bull traps, on the other way around, like I explained. And that's a common occurrence in these markets every day at about this time, at about an hour and a half to 3 hours into the day. Now, it's not every single day, but it's probably, I would say, 75 to 90% of all the days. It's that common. It's like, everybody takes a break and goes to lunch, right? That's how common it is. Now, if there's something really important going on, then probably people don't go to lunch as much. Okay. Which is not as common. So it's kind of like that. Okay, what I'm going to do is I'm going to find a good stop out right here, 56.84. 40. I'll make it 50. And I'm going to pick up another contract. So what this did was it moved down this area right here from up here. It cut it in half. So now the price doesn't have to go all the way back up to break even. It can just go to here to break even. And if I put another one on there, it'll come down a little bit. It'll come down to about right there. But if I double this again, this will come down. The break even will come down to right in the middle, right? And then if I double again, it'll come right down to here, which is the middle again. Okay. But the thing is, though, is that that's a lot of increased risk. And that's not what you want. It depends on how big your account is. These classes are for people that are just starting, and so we're talking about like 1 to 3 contracts in the futures. Okay, so, but it still applies to larger accounts for the basic strategies. In that, if you've got 100 contracts that you can use, then you would just divide it into 2 or 3 pieces, and that would be your basic comprehension, strategy, process. Okay, but the thing is, though, is about having 100 or hundreds of contracts. You get into more strategies, and so things become a lot more complex than what I'm showing you here. Also, it becomes technically a little bit easier because entries and risk limits become more fungible, and you don't have to make as big of a percent to make as much. The more principal you've got, the more you make per percent. So you don't have to make as many percent, and therefore you don't have to stick your neck out there as much, right? Things become more guaranteed, and ideally, the more things become guaranteed, the more your principal is going to grow, the faster your principal is going to grow. So it's kind of a win-win deal. Yeah, this is the part of the videos that gets really boring. This isn't how I usually do this. I'm just going to follow through here and kind of talk you through it. This is kind of like the bare bones route through my strategies here. Normally, I'd have an ATM strategy where the stop and the targets come on here automatically, okay? And then, of course, I'd be running this side strategy, which is funding all of this. So this movement that I had that came down from up here down to here, all of that, I would have captured at least some of those pieces, if not all of them. Over here on this side, on this dome, right? And so that way, if this thing broke loose, and we did fall down here, okay, then I'm covered. I would just knock myself, knock my trade off the table right here, and I would know no worse. Okay, we'll get through a few trades. Friday ain't the best day to trade. Okay. People get kind of reluctant. They start heading home. early. Also, Amazon bought Whole Foods, which is a big deal. So basically, that has all of the hedgies doing homework all weekend. They gotta figure everything out in the entire industry sector. Walmart was getting into food, so on and so forth. There's a lot of grocery corporations that play their part in there. You got organics involved in there. You've got money, cash supply, money supply that's going to be affected in that. So there's a lot of numbers to do for them. Then they have to give themselves a forward projection model to base their strategies on, their precautionary strategies, profiting strategies, and then they got to base all of that within the overall global political, economic, technological, central bank economic paradigm, right? So it's machines within machines, and they gotta basically rebuild a whole new machine and then link it all up to the bigger machine. So this is really slow, right? This might be done. I don't know. I mean, it's Friday, so as you can see there on the left dome, the price is coming back up to break even. As soon as it gets up there to break even, what I'm going to do is I'm going to drop that first contract, and then I'm going to have a lower position. All right, so if I get in lower down here, right, then my risk decreases because essentially, if I've entered here, then all I can lose is this right here. Understand? And but if I'm entered up here, and then I break through here, then I would lose all of this up here. Okay, it looks like if I look over here on the bonds, the treasury bonds, it looks like we are dipping back down below the 34E money line. It looks like it's that time of day. I can see this volume bar right here, probably indicating the reversal. It's a short price bar, okay, with the big outlying volume bar. Looks kind of consistent all through these different treasuries. And so that's indicating a reversal. It looks like we're taking a break here. It looks like we've dipped down below here and here. These others will follow through, I'm assuming. So basically the general rule of thumb is that when the bonds are dipping down, the stocks are rising up, and vice versa, normally. And again, I'm not playing this as hard as I can. This is not my A game. This isn't even the actual entire strategy that I would do. I'm just talking you through a basic trade, and I don't mind losing it as much as winning it, to tell you the truth. Because either way, I'm going to explain something that you might not have known otherwise. So about the oil, basically the oil's getting choked. OPEC's got to cut their market share. They tried to usurp as much market share as they possibly could, but then they could have never foretold that fracking technology, American fracking technology, would advance so much that it would basically make it so that all of the previously known oil reserves and natural gas reserves as well, which were limited based on what they could reach down there. Now they can reach the full extent. Therefore, the total natural gas and oil in the world has increased that much more, and that suppresses prices. Also, the technology is so much cheaper and faster than ever before, so everybody in the world's drilling this stuff. They call it the glut, the oil glut. And basically, what that means is that there's a bunch of oil in all these tankers on land and in gulfs, in ships, sitting around, not getting processed, not getting used. Actually, oil consumption is decreasing right now. They assume that we are in what is called peak auto, which means that the rate of auto production, the rate percent, has maximized and peaked because of a lot of transportation, not necessarily transportation, but transportation, yeah, on one hand, but there's a lot of other things in the technologies that have advanced everything. You don't have to drive to the bank anymore, right? You can just bank right here online. You don't have to go get a newspaper. You can find the news right here. You don't have to go anywhere to meet anybody and fly around and do business deals. You can just communicate. There's so many things that have happened technologically that reduce the need for all of the transportation. And so, and then with Ubers coming along, you've got the electric automobile thing coming along. And then still they're going to have hyperloops and that kind of thing later on. So the interest in having your own car and having multiple cars, as a matter of fact, I mean, from the folk that I'm from, everybody's got 2, 3, 4, 5 cars. Backup cars, different purpose cars, trucks, SUVs. Here we go. Okay, so basically you've got a lot more oil. You got cheaper oil, meaning that anybody can get into it. Okay, so the cheaper it is to get, the more drillers there are in the world. Okay. And the faster they pump it. Okay. And there's more of it. So there's more below the ground that you can get, which is going to mean that it's going to last longer in history. And not only that, they're switching over to natural gas, right? There's a lot of switching to natural gas, right? Because it's even cheaper and there's even more of it. There's so much of that stuff and it's so cheap and easy to get that they don't even cap the wells, they just burn the stuff off. So at these wells, it's just burning off. Right? And don't worry about the carbon dioxide or anything like that, okay? I explained this in a different video. I'll just quickly go on that. Basically, there is a combination of molecules in the atmosphere. And where carbon dioxide is concerned, there are 0.038 parts per 100. Okay. So the percentage of the atmosphere that is carbon dioxide is 0.00038%. It's like 1 over a few thousand. Okay. So it's an extremely small, and that's just, it's actually a lot more than that. 1 over a few thousand. Actually, I can do the, okay, so I bought in a little bit lower, and what I'm hoping is that this is gonna go up, and then I'll just knock another one off. And so what that means is that theoretically, my entry price will be down here somewhere, right? So, or even lower. Okay. So if I can do that over and over and over, theoretically my entry price goes lower and lower and lower. So whenever I get knocked out of the trade, because I'm not going to hold on to this thing any lower than this right here, this support. So I might get knocked out here, but then I'm entered theoretically way down here, and so I profit all this. Okay. But anyway, back to the carbon dioxide stuff. Yeah, let's look at that on the calculator here. That's something that people like us need to be handy with, is a calculator. They say that if everybody just figured out, hey, there you go. All right. Oh, now I'm short. Well, what do you know? Hold on. There we go. Okay, long again. All right. I gotta fix that. That was an accident. I wasn't supposed to go short there. Hold on. Let's see here. It's 84.50, 84.25. All right, I'll hold down to there. So as you can see, I've done this multitudes of times, and I'm coming up with a profit. So let's see. These things are, I think they're 6 1/4 or 6.50 per tick. I don't even know. But basically, my entry's working down there. Okay. So you can see that, after you get it, you don't have any worries. Okay. And this is only half of it. This is just one half. So I'm keeping it simple right now. All right. This is bare bones to the strategy. There's actually a talent here. Right. This is kind of like a I mean, a piano player's got to play different octaves and different levels and different engines within the bigger engine with two hands, you know, and that's where it starts to come in. I mean, that's where I'm going to take you. Okay, that's what you're going to be able to do. So you'll be reading the maestro over here and your music sheet, and then over here you get the left hand and the right hand, both capitalizing. Now on this one, I'm thinking that this thing has taken a little bit too long for my liking. Also, the MACD is starting to slump off down here. So once these green bars start to come back down to the where they turn into red, then I start to get kind of precautionary. So if this thing wants to go, I'll pick up another long one down here, and then I'll repeat the process. But I'm not going to pick up a long one up here because I don't want to lose two parts on this sector right here, right? So if I'm going to lose on this sector and it hits my stop, then I only want to lose one part there, right? So I want this to actually fund. I'm funding this, right? Because see, basically what I'm saying here is that I'm buying this, okay, and that's all profit, okay. This is business, right? You gotta think about it. This is the pawn shop. I'm selling candies. I have a candy store or a retail shirt and short store. There we go. There we go. You understand? And so I've invested in these, right? And I'm trying to sell these, okay, up here at these prices, okay? And so what I'm willing to pay is this down here. Makes sense? All this down here. So this is my cost. All right. So my strategy has allowed me to pay for all this, to cover all this, right? So the more times I rung up, right, I bought another, and then I sold up here, and then I bought another, and then I sold up here. That all covered all of this distance, okay? All of this cost. So I've got my cost way down. Now, if I grab a contract right here and I double up again to try it again, and it's kind of late, right, into the thing. Also, it's kind of late in the day, so I'm getting leery about the opportunity to rise any higher here, and so I'm kind of skeptical. I'm thinking that this is probably gonna hit my stop, and so if I buy one here, right, and I lose this with two parts, right, two contracts, two parts, however you trade, then I'm going to lose twice as much, and so then that's going to put me in the hole. But if I just lose this on one part, okay, and maybe I pick up one down here, right? Maybe if I can get in down here on one more, and then I'm doubled up right here, and this is a double loss right here, but it's not very much. It's just like 3 or 4 ticks. And then it's not so bad, right? That's what you want, not so bad. Right? You want this to be as free as possible. No cost. That's the idea. So basically, this is how you work, right? So penny earned, right, comes from a penny saved, okay? Yeah, you can work, you can get paid. You can also save and reduce your risk, and that's paid. That's a fundamental part of this job, of this business, is you're reducing risk, reducing spending and paying for the cost of buying this stuff. And if it's a bust, right? If you bought a bunch of jeans and they wind up not selling at the store, it costs you nothing. Okay. So you can get out at break even. You know, that's the main idea. The rule of the road is don't lose money. 2, don't lose money. And 3, refer to 1 and 2. Okay. So, because if you can just work and not lose money, okay, then everything else you're going to do at this job, you're going to see the opportunity. And, you know, as easy as you can accidentally lose on a trade or lose on an investment, you can as easily accidentally win on them. But if you control the losing ones, the losing accidents, all right, and you're actually profiting on them instead of actually losing on them, okay, then all you can do from there on is fall up instead of falling down, right? So you stopped yourself from falling down, sinking. Right? You don't want to lose your principal. You want to keep your principal primed, right? The dry powder saying, keep your powder dry. Okay, that's how that applies here. Because if you don't, and you're already losing on it, and then you're going, oh my gosh, I want to get so rich so fast, and then and so you know you're working hard, but you're taking big risks. You don't know what you're doing, and then you're down, and then here comes the big opportunity. Like they come along. It doesn't matter how many there are, but you've probably got 5 to 10 bigs. It depends on which part of the trading industry, the investing industry you work in. There are more there. Okay. And so, you know, you got to be able to understand it as well. So you actually do have to work, right? I work a lot. I work from eye open to eye close. And that's just how it is at this part of my life. And how it's been for the past 10 plus years. And so, you know, when those opportunities come along and you've been losing your money because you don't know how to work and then you don't have any cash to invest in those opportunities. Now you're losing. Now you're losing big time. That's costing you, right? So you would have done better just sitting on your hands and not doing anything at that point. Okay. You would have made more profit. But the thing is, though, is that's not how it works because you have to work. You have to do something. You got to keep on practicing. You got to do something. And, you know, there's that saying that, you know, the best business to be in is any business. And the reason why is because if you're not in a business, then you don't have any idea what the opportunities are because you just don't understand business. You'll never see the edge if you're not in a business. Doesn't matter if it's doing good, bad, or you know, just not doing anything at all. But as long as you're working on it as a business, then you're going to see other business opportunities, right? But the thing is, though, is what you've got to learn to do at the same time is not lose in a bad business so that when you see the opportunity come along, you can change from one market to another market, okay? And then try there and keep on learning, right? You're going to keep on learning and practicing, but you're also going to make sure that you don't lose at the same time. That's the key thing. It's 2 parts there. The work on not losing, strategically not losing, right? Saving, reducing risk, earning while your positions are losing, you're earning to pay for that loss, right? That's one part. The other part is actually just understanding how the economy works, how the markets work, the trends. What's the sociological phenomenon out there? What is civilization, right? You got to think this is a spiritual world. Now that might seem like something that doesn't mean thinking and remembering and emotions. That might seem like something that doesn't have that militaristic white smock, rubber glove kind of feel to it. But you know what? You're part of a new era more than likely if that doesn't. Or if that does. So what I'm saying is that if the word spiritual means that, you know, it's a thing of passe, then you're not really understanding the civilization entirely. You know, spirituality was the study of psychology and military and politics and religion and sociology and economy, pricing. I mean, on and on and on. That was civilization, right? But the terminology has changed. So it's kind of like you're in a different country where the words are different, right? So that word sounds foreign to you. But it's the oldest study there are. Okay? And when you can see what that all that entails, then you get a better grip of really what you're actually where you're actually working. What are you actually serving? How does that apply to this? You know, civilization is the giant, okay, and business is kind of basically you're reading the giant's mind, right? That's the spirit of the giant, okay. So, and you're anticipating where that giant's footstep is going to be, okay. And so you're trying to do your work and facilitate that giant's footsteps, okay. So the only way you can do that is if you can read the giant's mind. Read the giant's spirit. How does the spirit work? It's a super phenomenon, first of all, right? What does the giant remember? What does the giant know now? What is interesting? What is not? Okay. Where's the fear? Where's the risk to the giant? Then you run along as this capitalist, this broker of the giant's needs and wants, right? Versus those that are making and supplying, and so you're just basically a relay person, right? You're just relaying back and forth, back and forth, back and forth. But the thing is, though, is you're putting yourself in a position where you know that the giant needs, not where the giant don't need. Because basically, if you're buying things that aren't needed or wanted, you're paying too much, and then you're not able to get rid of it at a higher price. So you have to get rid of it at a lower price, right? And so you're in a losing situation. And that's where you start to lose your principal. And then you start to run out of capital, and you're supposed to be protecting this. That's your job, right? You're supposed to be able to profit on on that kind of situation, right? You're supposed to be able to hedge against it, okay, and then be quick enough to profit from it, so that way you're paying for that loss. That's the cost of doing that job, is that loss. Now, ideally, you won't lose at all. Right? For instance, right here, ideally, this trade is going to run higher. Okay. And so there's no loss at all. But I know that these things go wrong all the time. Okay. So if it's going to go wrong all the time, that's going to be my cost for this. And in order to pay for this cost, I need to do things otherwise that pay for all of this. Okay. And so that's where the strategy, the work strategy, comes into play. Okay, but this is very simple, you know, cave sticks and arrowheads kind of business right here. I'm telling you, this is the most primitive kind of business right here. But it gives you a basic understanding of of the way the Lincoln logs are built, the way they fit together. Okay, and then once you can do it here, okay, more than likely you've followed along, you've learned a lot about the bigger picture, the macroeconomics. If you're a conservative news watcher, you'll probably know a lot about culture, civilization, politics, the big picture anyway. You got your eye out there, you're watching the giant. You're watching the giant's eyes, you know. And if you're a Christian and you're going to church and that kind of thing, that's an even bigger advantage because you know what's decent and you know what's not decent. You know where people are headed if they're headed the wrong way, right? So you know a bad investment when you see it, you know. You know a sustainable investment when you see it. See, that's the thing. Capitalism is the extension of Christianity, right? It's where it's from an apprentice that doesn't get a criminal record, right? Stays up and up, keeps his mind on, whatever the peers in society, the adults, the authorities, have in mind for everybody else, right? So instead of, thinking worthless things all the time and practical things that get you in trouble, and definitely things that cause you to do what? Lose money. Instead of doing all that, okay, you're not losing money. You're not getting a negative record. You're using each of those vital years to learn something that's going to allow you to create something of value. And then finally, when you're through all those young years, you got a clean record. You know something, right? You know how to make original value. Now you come out to trade, and that's where the capitalism begins. And then you do the same thing for the next generation, right? You're going to apprentice your children and other people's children, your students and your employees, and so on and so forth. You're also going to be an example for as far as internet will reach in some cases. Okay, and so then it's an exponential process. It's building one level over the next level, right? And that's the way we want. But if you're not so Christian, then maybe that would seem impractical. And definitely if you're not so capitalistic, right? You think that capital brokers are a bad person. Bosses, which are work brokers to retail buyers, right? They're bad, right? Which a lot of people are taught now because of the rise of Marxism, right? The monarchies from Europe were scared of capitalism, right? The American capitalism. I mean, it took right over Europe, so they were scared. So they came up with a whole new cognitive frame of reference, and they taught everybody that bosses, and capital brokers, which is what we are doing right here, taught everybody that those guys are bad. Revolt against them. And you know how many revolutions they've had? Something like 40-something revolutions. Do you know how many deaths? And it's not funny, over 1 billion. Okay. And that's in a very short while. It took, in fact, I don't think that the total for all of the wars previously in the last 10,000 years amount to that much. So it's a big deal. And the reason why they do that is because they want to wear you down, so then your country has to borrow more money from their central banks. Okay, that's how they do business. That's how they grow. Okay, and then they take over the world, right? Because you're weak, Because I mean, if everybody's thinking, well, my work is worth more than what the boss can sell my work for, right? Then you're not going to have any bosses. If there's no bosses, right, then there's no brokers, right? And then everybody's poor. So, and then when everybody's poor, what does everybody do? They start believing all these things that, they're getting handouts from the government, right? They don't have to earn them. Therefore, they don't have to be polite. They don't have to pay attention to adults. They just get food like little animals. And then they become rioters, rioting in the streets, killing police, killing people that have different political positions, people that believe that the worker has to work for less than what the boss can sell the work for. Right? Those people, they start hunting those people down. Right? So, now all that stuff, that is actually all spiritual business. It doesn't sound like it, but I'll tell you what, a couple hundred years ago, you would understand exactly what I'm talking about if we were a couple hundred years ago. Now, maybe you would call it sociological and that kind of thing. But either way, I'm going to tell you that I like to use the spiritual word because the people that I relate with have a better understanding of that. And if I can apply that to their business perspective, I think they're going to do a lot better. And also, it's healthier, right? Psychologism and scientism are not as healthy. Supposedly the United States and Europe are the most advanced in psychology and in sciences, and all of the prescription medications and DSM-4 diagnoses and so on and so forth. And yet, we have the worst per capita rate of mental health issues. So somebody that comes down with a mental health dilemma in India, rural India, right, pretty much almost always has no problem after a short while. Do they use a bunch of prescription pills? No. They're spiritual people. Okay? Now, I'm not saying that all of that kind of caste system and reincarnation is not reprobatism, okay? But they are spiritual. There are positive aspects about the religion, their belief system, okay, their faith, right? They do acknowledge the spirit. There is a super phenomenon inside of you and everybody else around you. They acknowledge that. But psychology makes it so that, see, here we go. Now we're going to see how much this cost. I'm going to buy one more. Okay. Just in case. All right. So that's not a bad loss. Right? So basically that was $65. This doesn't include fees. So the trading fees, there was probably about 5 trades. Well, I messed up that one time, so 7. 7 trades, 14, 7, about $21. So this would be about 86 bucks. It's getting close to being pretty bad. If I'm working on a $500 drawdown. Okay. I would say 250, that would be terrible. Okay. But how much was I going to make? I was going to make at least that much, right? So that's kind of a 1-to-1. I would say 1-to-1 is pretty good. Once you get to 2-to-1, as in you're losing twice as much as you're going to make, you're really backpedaling. Okay. So that's just a basic trade. I don't know. I might try to do the two-sided paddle here, but I want to continue what I was saying there. Yeah, Okay, so psychologism, which is basically a belief, right? It's a belief. You can say it's a political stance. You could even say it's a religion or a cult, right? Culture, cult, ideology, religion, political position, right? Now, facts don't need believers, but that's what science is supposedly about, right? But we know that science is a belief as well. So every century, science changes. And believe it or not, often it isn't because they found new data or new facts to change the belief, but politically, for political reasons, the data has been changed. Or simply the lie about the science comes about, and the lie is said to be science. So then science is a political belief or a faith or a culture thing. Okay. Now all of this stuff is ideology. Now ideology pertains to civilization. The spirit of the giant pertains to the super phenomenon of the spirit and the ideology. The facts don't need us. You understand? The facts are different, okay? And the same is true of the giant. The spirit doesn't necessarily need the giant, okay? And so you get all this understanding, and you get it into the business fundamentals, the economic fundamentals. Never forget the military aspects of everything. I've seen a lot of hedge funds that go down because they don't understand the military aspects. They don't understand the conflicts between Marxism, how that is actually a diabolical faith. They don't understand that Islamism is a diabolical faith and that capitalism and Christianity are not. They don't understand how these things work against each other. And so a lot of hedge funds have lost a lot of money recently in the past few years because they don't put it all together. They're not doing all the homework. But the thing is, though, is these lessons are not in college. You have to figure these things out. And so in where with who I'm studying with these days, the people that go to church, the people that know the Bible well enough, and the veterans, right? So military Christians, they're capitalists, they're anti-Marxist, they're anti-socialist. That's for sure, because that's nonsense. You know, these people, I believe, have the best chance at succeeding at, you know, bare bones market business here, unlike the hedge funds, because they don't, you know, they are into psychologism. They're also into paganism, right? Maybe not outright goats heads and everything else, but they're definitely not into Christianity, which is spiritual, right? So they're into the health of the spirit and so forth. They may be into the health of the spirit, okay, but they're also into sacrificing, right? So they're gonna allow, or they're gonna help run down other people's spirits for their own spiritual health, right? Kind of like these cults in Mexico and California, the Santiera and the San Muerte. Okay, same thing, or ISIS, or the Aztecs, or definitely the Marxists. And basically, in that psychologism kind of esoteric faith that they've got, right? They reduce everybody down to a biological clump. Okay, so you know, if you hear the justification for abortions, it's that these aren't people; they're just biomatter, clumps of biomatter. Okay, so basically these anti-spiritualists, that's what they are, is anti-spiritualists, reduce everybody down to basically you're an electrical surge inside of a bio clump. And so up there at the big top, a lot of times they're making mistakes. And when they make mistakes, they lose money. And guess what happens to these kind of people? They wind up thinking of other ways to fix their mistakes. So then they wind up robbing people. Right? They wind up undermining people. So that's why the direction is a bad direction anyway. And if we don't make people that can actually understand what they're doing wrong, then they have no checks and balances. There's nobody standing guard, and they're just robbing the coop. You understand? Right? So there needs to be some sheepdogs to take a look at these foxes and stand watch. Now, the thing is, though, is, like I'm saying, that these sheepdogs that I'm looking at are more adapted for the job. Right? They have the trained eye already. They just need to know how to capitalize and how to analyze these business fundamentals. But they already understand the military component. They already understand the spiritual component. They know right and wrong. Okay? And they're going to call out, who's wrong. Definitely call out who's wrong, right? Don't let them get away, because I'll tell you what, when you let people that are wrong get away with it, okay, then they go on selling the lie for more market share. And if they get more market share because there's more suckers believing that they're right because nobody says they're wrong, then they become more powerful. They have more control of more capital, more control of more assets. Therefore, they have more money to buy more people's talents. And then those people's talents are how they control more of the market share to gain more of the market share. And it's all just a big fraud. So that's a gold mine. If you can coordinate with people online, okay, with all these journalists, with all these business people, you have all your conservatives, et cetera, okay, and then basically everybody's exposing all these lies, then that becomes a gold mine for everybody to get in. And so there's a rush right now. The internet is the truth rush, revealing all of the fraud, all of the false hegemony. Okay. And so what happens is basically what they've done is they've hoarded all this money, all this control, all this asset, all this market share, which is people's, support, right? They've hoarded it all. So look at it like the economy around the world is like one table. Okay. And so in one corner, they hoard it all with lies and schemes and murders and wars and all kinds of money Ponzi schemes, like the central banks, the regular banks, the politics, you name it. And but the thing is, though, is that that's a ship on a sea with a hull made of lies and liars. But when those liars, most of them actually just don't know any better. When they are exposed and they realize, hey, everybody sees that we're just a lie, we're a fraud, well, then what happens is that they defect, right? And that's when the ship starts to sink. Eventually, the hull defects so much that it just crashes. And so the liars are in the sea with us. And that's what the internet does. The internet's kind of like flooding the world with the truth, right? With all the eyes. The internet's always looking. Always. And the record stays. And it's like the more powerful and high profile you become, the more like a coral reef you become, where most of the fish of the ocean stay. Most fish of the ocean stay around the coral reefs, right? And so if you're good, you're going to last. If you're bad, you're going to be torn apart. You're not going to be a coral reef anymore. And that's where you start to let go of all that wealth, the assets, all of the support. They're going to start to run for the hills. Before they thought, hey, this guy's good or a bad, but he's going to win money. I'm going to get more money if I invest in him, right? So you get political donations and so on and so forth. But then they start to become risk on everybody's ledgers, on everybody's books, right? This guy's a risk. Everybody knows he's a fraud. So because of the internet, he's out there naked in the sea. He's not whaling. He's not going to haul in whales. There's no way he can survive against those anymore. And if we donate money for him again, or her, in the next election, or with the business from this point forward, or whatever the case is, the charity foundation, etc., then basically all we're doing is burning our money. There's no chance we're going to win with him. Everybody knows he's a fraud. He's just a sunken ship. So what happens is that, remember, everybody tore him apart. As they exposed him, they gained more support, okay, for being a truth teller, right? That's what happens. When you know the news, you become popular. If you know how to trade against that, which I train people to do, then you can capitalize on it. I mean, those are gold mines. So if you see them all going the wrong way, and then you know that they're going to get caught at the cross paths, you can capitalize on that, because there's going to be a big fail over there, and there's going to be a big win over here. And the way it plays out in the markets is that the whole thing's just going to flip up on itself. And so, between short selling and buying and that kind of thing, you can position yourself to take advantage of those big ledges. The bigger they are, the more gravitas they have on markets. And the more gravitas they have on markets, the more potential price action you've got to take advantage of. And basically, these are the elitists, right? They have their pockets wide open in our markets, okay? So if we can get the dirt on them and we can calculate exactly their direction, we can follow those giants. And we know exactly where they're going to trip and they're going to fall. And they're going to land right on our bank accounts with their wallets wide open, and they're just going to empty out in all of our wallets. And so those hegemonies become smaller and smaller and smaller because they can't get the kinds of suckers they used to could get. Because information travels so fast now. You can get video of people, you can get audio recordings, you can pull up history from hundreds of years ago, which they're still, which are related to some of these entities, these diabolical entities and good entities. You can pull up all this stuff. It's moving around so fast. It doesn't disappear. It gets repeated more and more. It gets curated into documentaries more and more. And so more and more people become more and more aware of it. And so it becomes, to them, the sea becomes more toxic. But to us, because they are being harmed and not helped by ignorance, the sea becomes more pure and healthy, and the prosperity comes back to the people, the security comes back to the people, because if they can't control with as much power, then we're safer, right? So if we can keep the power out of them, right, and give the power to who deserves it, right? You want to give it to experts. I mean, I'm not saying that you want to go broke for everybody or anything, but we're not all experts. If we can't fight our own fights, then we basically got to hire somebody else that is an expert, okay? Right? And so we try to keep the experts at the top tier of society, okay, above the fools, right? And I say fools because I'm hard, but experts do have that place, and everybody else is kind of in between. And we definitely want to keep that in order so that we're filtering out the diabolical, the experts at diabolical machinations, schemes, scams, cults, lies, blah, blah, blah. Well, this market, I'll tell you what, this market. So it looks like we're about to sell off there. But this video is running a little bit too long. I think that lesson went on for a while. I think I got in everything there. I think that basically the main point of what I was trying to bring you all to is that this kind of trading right here is a good place to warm up to the macroeconomics, how do businesses work, how do economies work, okay? Get familiar with that kind of news, see where the trends are going, that kind of thing. But then, basically, this is really primitive business right here. And but what you're going to learn right here, though, is the strategy of of what you're going to learn right here is the strategy of paying for your cost of investment. Okay. And so that's all of the hedging, the risk reduction. You're going to see all the loopholes, that kind of thing. And then when you've developed your capital here, then you can move on to the broader picture where you're looking at the fundamentals of the businesses. You're comparing the businesses. You're comparing the industries. You're looking at new innovations, oncoming industry disruptors. You're looking at political disruption. You're looking at cultural disruption, cultural changes, shifts. You're looking at military matters as well. And then in that portfolio with all the money you make here, okay, in that perspective, like as in, in your stocks and also your options, your bonds, your forex currencies, your cryptocurrencies, and your futures commodities, and all of that, you're also able to hedge yourself against all of the risks, like you've learned right here. Right. So you learn how to hedge against that stuff. You use all those other investment vehicles against each other, basically. You tie them, the investments, into pretzels so that you're making money on the way up and on the way down and everything. Basically, you're planting fields and you're harvesting fields, so to speak, all the time. When you're harvesting, then you're transferring the seed into the investment vehicles that need to be replanted, and then when they start to harvest, then you're doing vice versa. And then also, whenever something doesn't work out, for instance, today. Today, Amazon bought Whole Foods. Well, that hurts Walmart, that hurts Kroger's. Walmart, because they were getting into foods. Okay. So, and these stores are cutting very thin profit margins. In fact, they've been having problems lately, and it's mainly because Amazon was competing with them. And I suspect that Kroger's had a heads up on what Amazon was about to do, and that's why they gave the report that they gave at their earnings call. But so these are doing pretty bad now, And then Amazon pulls this, and guess what? You've got to have backup in your portfolio, so that way when your Walmart stock and your Kroger stock gets hit, if that's what you've got in your portfolio, then you're not paying up for it. You've got backup that you've already learned. Your strategy is robust, right? Okay, so that's where the skills from here come in. And like I said, it's kind of like the piano player working on different levels with two hands. Okay, with the ongoing beat on the outside, and also well, it's just there's a talent here, okay? And then when that transfers to your portfolio management, okay, that's gonna start to get into people's tastes, right? Piano players got to play to the taste as well. Just because he's quick and talented doesn't mean that anybody's gonna like what he's making. You know, you do have to read tastes when you become a portfolio manager. But if you can learn how to play here on this keyboard, okay, then you can transfer that skill over there to that keyboard, okay, which is much broader, okay, and it's also slower. So in a way, it's kind of easier, but you still have to do a lot of research and homework, so to speak, homework, and it all ties together. And I'll explain this as we go along. I think I'm gonna call it quits here. Let's see here. What would I do here? I've got support running out here, right? Looks like we could be bouncing right there. Looks like I'm still at break even, right? Yep, okay. Now, I'll tell you what, when it comes and bounces, when it bounces off of that, did I say support? I mean resistance. When this it bounced off resistance one time, that was when it was up here. The price was up here on the dome. So when it bounces up off of resistance again, I'm going to go ahead and put in another contract because I think that's what it's going to do, and then run down a little bit more. Here's a factor that you might not have thought of. At this time of the day, the volume gets so low, and it's also Friday. And one of the things that you've got to know about is that in order to get price to run away from this I use this blue line as a reference. This is the 34 EMA E-money line. I call it the E-money line or Harmony line because it's basically the center of the road, okay? It's the median. And in order to get prices to run higher than it and lower than it in any significant move, okay, you need a lot of volume, but there's not a lot of volume here. Generally, at this time of day, generally there can be, but on a Friday afternoon, okay, you know, it's just hard to come by, and so you've got to realize that in your strategy. So just remember, volume is like gas. If the volume is not in the market because they just ain't there, then it's very hard for the price to drive far away from the 34 EMA. That's exponential moving average, right? And so if the price can't really drive far away, you've got to plan for that. You got to say, okay, well, this car is not going very far, therefore I'm going to trade accordingly. But if it's earlier in the day and earlier in the week, then you know that price, that price can actually run far away from, say, E-money line. I'm going to put a stop at 87 and a quarter. One of the things about adjusting for this job, I used to be an athlete, and then I got into arboriculture, so uh, very high metabolism, okay? Always fast thinking, fast moving, extremely strong, and worked, an incredible amount with power. And then to sit down and do all this, well, I didn't stop working hard, I'll tell you. But the thing is, though, is it's a different kind of work. It's kind of like taking a champion racehorse and then tying its legs, bending its legs, and tying them to two by fours, and then just laying that horse down and hobbling the horse, right? So the horse doesn't go anywhere, right? I mean, it's just a completely different forte. Dealing with the entropy, for one thing. Now I'm gonna start exercising and everything again eventually, but I'm getting the big hard part done. There's a big hard part, which is learning everything, knowing it, you know, by heart, like your favorite song. And it's a lot of data, tens of thousands of hours. But I tend to think of it like a bunch of brush. It's just a bunch of underbrush, and you know, I've sorted it all out. I've categorized all the species. I've mapped all the topographic terrain. You know, so it's like it's the woods backyard or something. And that's what that's how you got to have it. I mean, if you're gonna make some serious plays out here, run some serious contracts and make some serious money on them, you got to be able to do it right, efficient. You got to make quick decisions, fast reactions. Things go wrong all the time, and so when they do, and they catch you off guard, it's a bad thing because you didn't know how to react. You didn't understand the terrain, didn't know the rules. No strategy, no plan, no experience, no observation from other people's mistakes. So I'm planning for big business. Big business. I'm just making the foundation, which has been hard. I lost a fiance in the process, and other things, other people. But I know that if I drove up to the house, if I drove up to the house in an expensive luxury car, oh, then they're friends. So I know how all that works. And I see who's really a good friend and who's not. It's a shame. Yeah, so if you're thinking that, hey, I ought to be taking advantage of all this movement right here, yeah, there was 4 or 6 ticks that this thing ran up and down in, um, at least 6 or 7 times, and I could have taken advantage of that over here. Absolutely. In fact, I could have taken advantage of this whole move right here. There we go. No more loss, no more cost. Okay, I'm not going to run this thing any longer. We'll play again. Okay. Good luck. Let's see.